Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Monday, September the 13th. It is 2 days after the anniversary of September 11th. Boy, oh boy, what can I say? Well, let's talk about Asian markets and let's talk about the markets because this is a big week. It's the first week. It's not a fragmented week. Last week, people were coming back home from Labor Day holidays. I warned everyone that the volatility, the real trading action is not really going to start going till this week, but we've got a lot of stuff on the table. Matter of fact, we've got the consumer price index tomorrow, which will give us a good indication of how inflation is and the supply chain issues are impacting consumers. Then we're going to have industrial production on Wednesday, and then we've got big reports. We've got jobless claims, and most importantly, retail sales. Why is retail sales really important? Folks, retail sales impacts 2/3 of the GDP. 2/3. I didn't know this till last week. This is interesting. Healthcare is about, don't quote me, but somewhere 17 or 18% of the GDP. But retail sales is about 75% of the GDP. So this report is very, very important. Now, consumer sentiment also reflects on the same thing. I don't know why they always put consumer sentiment after retail sales. If consumer sentiment reflects on retail sales, consumer sentiment, if I could have a moving mouse, I would take this and I would put it on Wednesday or Tuesday, but I can't do that. I mean, I can't change Fed data, obviously. This is a federal calendar and it's written in stone. But again, retail sales is the big report, industrial production and CPI. And this way we'll have a very good idea of how inflationary pressure, well, first of all, how big it is or how big it's gotten over the last 3 months in terms of the consumer level or on the consumer level. We know on a producer's level, and I'll talk about that in a minute, it's going crazy. I think largest historic run-up in a year, but we'll see how it gets to the consumer level soon. And then we've got import, export, industrial production, retail sales. Let's talk about what's on the agenda this week, what the news has to say, because there's a lot of stuff on the table. And then we'll get into the nitty-gritty. Japan reported wholesale prices were near 13-year high in August. We were just talking about inflation on a consumer level. This is wholesale, 13-year high. Prices have surged in world's 3 largest economies, America, China, Japan, and elsewhere as supply chain troubles. I've been talking about these supply chain troubles and shipping bottlenecks for months now, and other disruptions arising from the pandemic hinder or return to normal growth. Yeah, the world was not prepared for like a 7th deviation of supply chain issues when the pandemic first hit. And car manufacturers halted their chip production, then they restarted it. It's been a mess getting through all of this. Stocks have been trading in a narrow range for several weeks. I've talked about the listless trading action and how the market has been following the Russell. It's been just kind of choppy, not going anywhere. We'll talk about that in a bit. U.S. inflation at the wholesale level climbed 8.3% last month from August 2020. The biggest, this is what I was talking about when we were talking about news, the biggest annual gain since the Labor Department started calculating the 12-month number in 2010. The Federal Reserve policymakers have said they believe inflation this year would be temporary. I wish I had a Pinocchio nose side effect that I could post here. And the result of the economy recovering from the pandemic, I'm holding my breath. However, persistently high inflation could force the Fed's hands to start pulling back on its bond buying program and low interest rate policy sooner than expected, which is why we keep our eye on the bond market. Sorry that I'm going back and forth, but I want to make sure you guys have the full impact of all of this. Pandemic remains in the forefront of investors' minds as hospitals fill up in the South and other parts of the country. President Biden announced Thursday that companies with more than 100 employees, that almost impact, I think it does impact our company. I think we got near 100 employees by now. We're the fastest growing financial publisher from what I understand in the world. So I got to check this number myself. Would be required to have their employees vaccinated or do weekly testing or announcement big companies have been willing to embrace. My question is this, and this is a bona fide question. Does it apply for people working at home or is it for people working at the office? We were actually talking about during our Sunday dinner yesterday. And I guess I'll find out. But I don't know that answer to that question. I'm assuming it doesn't apply to people working at home because, well, they're working at home. So what does the company care? But again, we'll find out. This just happened last week. And Apple fell 3.3% after a federal judge ordered the iPhone maker to dismantle parts of the competitive barricade guarding its closely run App Store, one of its biggest money makers. And because of this, one of the stocks you guys want to pay attention to is 𝗧𝗴𝗀. Why 𝗧𝗴𝗀? Because they make chips for the iPad and I think the iPhone too. So keep your eye. Let me just make sure I'm in the right company. Technology Solutions. But yeah, they make chips for Apple. Let me double check. I'll double check later. But they make semiconductors for the iPad. So keep your eye on the stock. If Apple's going to go down, it may impact this company. I've already talked about all the news. The biggest benefactor of all of this news is going to be the bond market. I don't know if the news is going to be good or bad, but I think we're going to stay within this narrow range. And every time we hit the upper end, we're going to hit the 200-day moving average. And I think later this month, end of this month, beginning of October, which is what I predicted all the way back here, we're going to break the 200-day moving average because the bond market is going to start assimilating the fact that interest rates are going to go higher. And if interest rates go higher, bonds go lower. Now, put to call ratio, again, because of the choppy market, it's almost at 1. So we have to be very, very cautious. And this is really interesting because I want to show you a combination of things. So put to call rate, this is how a trader thinks. So understand the process I'm going through. So put to call ratio is telling us we're oversold, right? Just go with me with this. Anything at 1 or over is oversold. Anything below 0.70 is overbought. So we're looking at the Nasdaq, and the Nasdaq, which is substantially higher already, had a real nasty down day on Friday. I say yesterday. Yesterday's trading session, which was Friday. So high volatility day. So the number of stocks, where is this, making 90-day high and lows is like 56 and 100, which means the bears are controlling, but 100 is very little. This is randomness. So put to call ratio is telling us we're oversold. The market had a big volatile day. What do? We use that for a pullback trade, right? Back to the upside. Look, market's choppy. The rubber band this is telling us the rubber band is stretched out to the downside. I look at the number of stocks making 90-day high and lows, and it's choppy, very, very choppy, which is telling me that the odds of the market going back and forth or back up is higher than it continuing going down, because it's hard to generate momentum when you have such a low number of stocks breaking out one way or the other. So what we're seeing is a very choppy market that's pulled to the downside. That rubber band has stretched us to the downside, at least somewhat. And if the number increases a little bit more, we'll go past that one threshold. The threshold's 1, but I guess we're close enough. So I guess we're still choppy. And the bottom line is, I'm looking right now at the consumer discretionary sector. The consumer discretionary sector, if you look at the various sectors, which we'll look at right now, if you look at the various sectors, technology is number 1, but consumer discretionary, look at a month ago. Consumer discretionary was in the last spot, and I warned everyone if it narrows down. See, technology is not 4th, it's number 1 now, and consumer discretionary is halfway up. Look, let's go. This is August 10th we're looking at right now. So August 10th, consumer discretionary is the last spot. Technology is the 4th spot. Today, Friday, September 10th, this is end of day. Consumer discretionary is not the last. It's now 10th, 9th, 8th, 7th, 6th spot. Not 11th, but 6th. And technology is not 4th. It's now number 1. But I'm not seeing that fragmentation that I've been talking about for months and months disappearing just yet. I think it's going to get a little better. But I want to see this break out. Once this breaks out, we may get a more not fragmented, but a more set market, a more non-fragmented or a more regular type of a market action. And remember, the time of year right now is where markets start getting trending again. Because take a look at this. I mean, this is what we've seen. I know you're saying, Roger, the Nasdaq made all-time highs on Friday. This is really where we're at right now. I mean, look at the number of stocks in the broad market trading above the 50-day moving average, 42%. We're bearish. We're at the 200-day moving average. So when you're looking at the SPY right now, and it says strong buy, just so you know, we're right by the 50-day line. And if you look at the equal weighted SPY, were very, very choppy. I mean, see that? A lot more choppier. Notice the angle. The angle here is about maybe 15 degrees, but notice the angle on the SPY. Look at that. It's like 30 degrees. So the large cap is still fragmenting, but not as much. So I think we're going to just kind of stay choppy and listless and pull back. Pullbacks, pullbacks, pullbacks. I think we're going to start getting trending when the XLY breaks out to the upside. I think that's when the market is going to trend again. Till then, it's very, very hard. Think about all the stocks in the consumer discretionary sector. Let me show you this. Look at the market capitalization. Tesla, Home Depot, Nike, Amazon, Lowe's, Starbucks, Target, General Motors, Chipotle, Marriott, Autos. These are huge stocks, right? So imagine this sector starts breaking out. If it does, we're going to see narrowness amongst the consumer discretionary and tech, and the market's going to start trending again. Now, on that note, I've got 3 stocks that I think are going to go back up because of that choppiness that we're seeing right now. The 90-day low, 90-day high, choppiness. Take advantage of that choppiness. First stock, eBay. Swing high, pulling back to the 50-day moving average. And what kind of stock is eBay? Consumer discretionary. Next, Salesforce. Swing high, pulling back to the 50-day moving average. What do people buy with Salesforce? Consumer discretionary, consumer information technology, consumer discretionary. People use Salesforce as a purchasing unit. It's a processor, payment manager. We use it. Consumer discretionary, spending equals Salesforce. Next, Equinox. This is not consumer discretionary, but I love this stock. This is a rating stock, real estate. Very, very, very world's largest IBX data center, co-location provider, fastest application performer, real estate trust that stores the cloud computers. So real estate company that subleases to cloud storage. Love this company. Made a swing high, and I think REITs are still it. Recommended this company a while back. Believe it's 50-day above the 200-day. Swing high, pulling back to the 50-day moving average. RSI not overbought. Take advantage of the choppiness we're seeing with pullbacks. Once markets start breaking out, we'll start looking at breakouts. But for now, there's only, look at this, there's only 100 stocks breaking 90-day, making a 3-month low, and 56 stocks making 90-day highs, 3-month highs. This and at the same time, put to call ratio is overstretched. Markets are choppy, put to call ratio is overstretched, pullbacks, 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 and pullbacks. CRM, pullback, eBay, let's go to eBay, pullback, and CRM, and eBay, CRM, and Equifax. I like these stocks a lot. We're getting a little defensive with Equinix. And I think consumer discretionary is going to go up for another round. So eBay and CRM for consumer discretionary. Folks, before I let you go, I've got something important, timely, and something you've got to pay attention to. We've had some swings. It's been a choppy market recently. That's what I've been just spending 15 minutes talking about. And I'm willing to bet none of us have been able to consistently time these moves. Well, I don't know about that. I've been pretty good at it. But I think about it. It's been hard. It's been hard with this choppy market. Wall Street legend Chuck Hughes, he's got a strategy that's giving everyday traders the chance to profit on thousands of stock, regardless of the direction the stock market goes. And you're seeing, look at this. You got 56 stocks breaking out and 100 breaking down. That's a non-directional market, folks. Imagine investing and not having to worry about current momentum levels. Oh, that would be great. How the bond market will move tomorrow. That would be even more amazing. Supply chain bottlenecks, or how the Delta variant is affecting economic recovery. Imagine if you could trade without all these nonsense issues that I just brought up, all these problems. It would be great, wouldn't it? It would be amazing. Are you ready to learn how this strategy is even possible? I sure hope so. Click on the link below to get more information about Chuck's weekly profit generator and learn how you can avoid all these obstacles like choppy markets, supply chain bottlenecks, bond markets not moving, put the call ratio going back and forth. Learn how to profit without all these issues, all these bottlenecks that I just showed you. Click on the link below, learn more about Chuck's weekly profit generator. And remember, Chuck is a 10-time heavyweight trading champion. This guy knows his stuff. He's not some beginner. Follow the link below, get in on it now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by being the first to be notified when I post a new video giving you hot stocks like eBay, Salesforce, and Equinix. And I'll talk to you later. Have a great week ahead. Bye.